Now, in Quantman, you have, for Nifty, you have data from 2019. For Bank Nifty, you have data from 2017. So, what I do, I create, there is two options here. Equity and index is a spot chart. Future and options is a future chart. Current month future chart. Okay. Now I take the equity and index chart. So, in the field, it will show equity. Upper trend 10,2, 3 minutes equity. If you want to do back test on Heiken SE, you can choose Heiken SE. Now I am currently doing in candlestick. So I use candlestick. Total 2 indicators added. One is current candle. Another one is super trend. Current candle close. Process above. Super trend. It's a bullish. Okay. It's a trend changing candle. Next, current candle close, process below, super trend. It's a trend exit. Now, I use the future to buy 10,2. I am using the multiplexer 10,2. By default, it comes with 10,3. I change it to 10,2. Future chart, 1 point, maximum transaction per day is 5. I give the timing for 9:15 to 15:25 for backtest purpose. 11:45 to 21 is the exit. 3:18, 15:25. 15:25 is our time-based exit. Okay. My condition is current candle close crosses above super trend, which means, see here, 11:45. Okay, entry order executed, and 14:21 trade will exit. Next 3:18, I mean time-based exit we have, which is 15:25. So 15:25 order exit. Okay, total 2 trade around 200 plus 300 profit, but in future these are goes to slippage. Okay, these back tested is on signal price. Now I log in Insta option, back test on this month only, January 1. So how many orders it can take, we can check. Okay, from this January, total 36 order taken. Okay, each and every day how many trades taken, it will show here from the backtest result. So far the strategy is not performing. Maximum drawdown is 15,000. Drawdown, how to calculate is from this high 6,500 to from the lowest to low. Lowest to low is minus 9,000. So minus 9,000, add this minus 6,500. So total 15,000. So we need to improve the strategy performance. So what we can do, we can add another one more indicator with different properties. 70 we consider as a, I use relative strength index, same without changing any properties. 14 period, 3 minute time frame, equity. I add one more indicator and condition, and relative strength is above 70. Exit condition is same. I add one more indicator only, so we can see the difference. Only one trade taken from this month. You can see only we are using one indicator. By using one indicator, we have a transaction of 36. When it comes to two indicator, only one transaction taken, which is on 7th. So we can modify a little bit trade count. So what I do, I modify the condition to crosses above to is above. Okay, is above means these are the candles are is on the condition. I change it to is above and do back. For margin, you need to calculate on your own, sir. Okay, here only one condition changed. Others are same. Crosses above, is above. You can see here. Okay, cross this condition, this strategy is crosses above, this strategy is above. Okay, you need to understand the difference. Okay, based on is above, we have 15 transactions. So what I do, our losses are reduced. Okay, from 6,000 to 5,000 losses reduced, trade count reduced, risk per trade is not, drawdown reduced. Okay, we need to improve even more. So what I do, with the same strategy, I do backtest with the 1 year risk. Just to change the time frame, January 1, 2024. From 1 year data, this is the performance. Okay, here it will show the 15,000 profit with a trade count of 723 trades. This shows 29,000 profit with a trade count of 264 trades. Okay, here we are using is above condition. Here we are using crosses above condition. Probabilities based on the condition, total 200 times the entry taken. Based on the result, this is the overall performance. Okay, with that overall performance, we have a winning probability of 37%. With the risk to reward ratio is 1:2 ratio with a drawdown of 24,000. Actually, in Quantman, we only backtest on the strategy results. Apart from, you need to add slippage and then brokerage trade charges. After that, you need to understand the performance. Then only you need here, it will show the risk per trade is 1.2 with the 1:1 risk to reward ratio. Okay, 2,589. Average profit divided by average loss is the risk to reward ratio. Minimum more than 2 will be good. Okay, here 2.1 is the risk to reward ratio with the 48% winning probability. Now we can upgrade the strategy even one more by adding other indicators. We are adding multiple characteristics of indicators. Super trend is one kind of indicator, it's a momentum indicator. RSI is a overbought, oversold indicator. Okay, other indicator we can add is Bollinger Band. So what I do, I add one more indicator, add indicator, Bollinger Band. Default value, no other changes, add condition and current candle close. Bollinger Band is a overlaying indicator, so we need to use the current candle. Current candle close is above BB upper Bollinger Band. No other transactions, submit. Next one is again copy and delete. From 19,000 to, there is no other changes even we are using Bollinger Band in crosses above condition. These two are crosses above, no other changes. These two are is above conditions. See the difference. Little bit improved from 29,000 to 36,000. Okay, so far we are backtesting on 1 year only. Okay, from that 1 year around 240 trading days, we have a trade count of 242 trades. Okay, now we can do backtest on multiple years. I do backtest on 2019 March 11 is the options, but right now we are deploying in future. There is one add indicator column, it's tab. You need to click that. In that you can search how many indicators are available. Each and every indicator have one characteristics. Also there is a price action, piercing line, Marabozo, bullish engulfing, bearish engulfing, Heiken-SG. So much indicators are available. You can use whatever indicator you want and do backtest and create strategies. Also you can, if you have one strategy in trading view and charting, you can use it through these two indicators. Simultaneously they are adding one by one indicator. In this total 6 years data, we do backtest on the indicators. Okay, here you can see this is above condition. Okay, only one indicator have crosses above, which is super trend. Others are is above. See the difference. Just one word of changing the difference. Here 93,000, here 3,84,000. Also see the trade count. Here 1300 trades. Here 167 trades. Okay. With the risk to reward ratio of 2374 divided by 1565. 1.5 risk to reward ratio with the 53 winning probability. Here it shows 1:2 risk reward with the 45% probability. But in this is above condition, you need to incur lot of charges. Better you can go with this strategy for backtest purpose. Here it reduces the drawdown also. Now here maximum stop loss is 6,000 for both. So I need to reduce the stop loss. So far we backtest on indicator. Once the condition satisfied, order execution. In order execution, there is stop loss on target. Okay. We are using the indicator stop loss. Now I am using the percentage stop loss. If I am using percentage stop loss, it will be huge because this is traded on future. So what I do, I use rupee stop loss. Maximum my stop loss is around 2,000. I am willing to take 2,000 risk. So I put 2,000 and do backtest. Yes, if you are using the 2,000 stop loss, the strategy drawdown reduced. See here from 18,000 to 10,000, stop loss reduced. Here we can check with the risk to reward ratio. 2310 divided by 1315. 1.75 risk to reward ratio. So better we stay with this strategy and improve the strategy performance. Okay, we can add one more index, which is, I add one more indicator MACD. Now I am adding the indicator MACD. No other changes, default value. Writing the condition. Here MACD is a underlying indicator, so we need to use the value, not current candle. So MACD histogram is above 1. Just a random number. In super trend, by using histogram, there is no other difference. Just it's add the drawdown. So we can add one more, increase the value by 3 or 5. See the part. Profit percentage decrease. Profit decreased to 64,000 with 2645 divided by 1564. 1.69. 56% winning probability. Risk per trade increased. Drawdown decreased. Strategy actually improved. Okay. Here, I am taking 2,000 as my stop loss. If I make a profit of 2,000, it's a 1:1. My risk is 2,000 divided by my take profit is 2,000. It's 1:1. Okay. If my risk is 4,000, if my profit is 4,000, my risk is 2,000. It's a 1:2 risk reward. For options, you can put 1%, but in future, you don't put 1% on percentage basis. You put around 2 points, 3 points like that. Next, one more indicator. Same thing, same condition. I'm using the option chart. Before that, I use 1:2 risk reward. Okay. From 2,000 to 4,000. Generally, future, if you buy a future, it asks for margin around 1.5 lakhs to 2 lakhs. Because right now the margins are increased. I do one more back test, which is options. Here I change from future to option. Right now I want to trade on options. Actually, if you add hedge means your cost will increase. This is for backtest purpose. Current week, spot based, future based, strike, whichever strike you want, premium based. We actually use premium with the 250. For if you are using premium, you can use stop loss. Now I am using 20% stop loss and submit. If you are using stop gain, there is no that much performance. Both data are same. See this chart. This is executed on option chart. Same condition. Only thing is execution. This execution on future. This execution on option. Around a difference of 54, 64, 58. May I know the difference? What is the difference here? What is the difference between future and options? Yeah, decay. Because options are dying asset. Okay. Always when you are in 1 hour trade means in future the premium will not decrease. Which means the future value will not decrease. Only the interest value decrease. But in option, when you are in 1 hour trading, the 1 hour worth of theta decay decreased. That's why in options it gives lower return. Here I am using 20% stop loss. So with the risk to reward, I am using 20% stop loss with 40% take profit, which is 1:2 risk reward ratio. My condition is that. So I give to create strategies. Then only you can understand this strategies, how it will work. So that you can create by yourself. With 1:2 risk reward ratio, only 5,000 decreased, with the risk drawdown increased by 2,000. Sorry, 9,000. This January month is in loss. Because of 75 quantity. Before the 25 quantity, January month itself 3 times increase, so 75 quantity. These backtest on 25. But from January it's in 75. Total transaction is 80 trades. Okay. If you give 1.5% slippage for options, it reduced to 24,000 with 80 trades, which means 80 transactions. So 80 into 20, 40, around 100 rupees is the brokerage and charges I am using. It goes to 8,000. Okay. When you do back test after giving 1.5% slippage, then you need to reduce this brokerage and charges. 8,000. So for single lot, this strategy generated around 16,000 with the 5 years of backtest. This is one of the condition. In Quantman, you can do backtest on multiple combinations, n number of combinations. Just by adding, changing the value, the result will differ. Once you created the strategy, you need to deploy the strategy. Okay. Once you deploy the strategy, there is a deploy option is available. Wait a minute. You have 2 options, paper trade, auto trade. Okay. Paper trade means it directly consider the entry signal and exit signal. If you choose the auto trade option, it asks for which order type I want to deploy. Use MAS or NR normal order, NRML or carry forward, CNC, like that, cash and carry. Okay. If you use important point I am telling you, if you are using MAS order, your strategy, overall strategy exit timing must be 15-14. Don't change the strategy timing to 15-25 and use MAS order. Broker RMS will square off the order. If you are using NRML order, your exit timing must be 15, 28, 26, 25, even 20 also. But if you choose MAS, your exit timing, total trading exit timing must be 15, 14. After that, If your order still executing in MIS means broker RMS will square off. Quantman doesn't know. Quantman will place the reverse order, which is sell order. Always use entry and exit in market order. Don't put limit order, because in option buying, whenever signal condition satisfied, the second itself, sometime the price drastically move. At the time, if you are using limit order means it will wait for the order to execute, but market price will trade at higher. That's why if you are using limit order, you will end up with a slippage. But if you are using limit order, your order will not execute. Always use market order for entry and exit. And if you put a stop loss, you have two options: traded price, signal price. Okay, give signal price and square of transaction is when it is failed, and then deploy. Once you deploy, the strategy page look like this: completed transaction profit. Run type live means your strategy is running live, which means whenever the condition satisfied, it will directly place the order in your broker account. You need to carry your fund in your broker account. If fund is not available, your order will be rejected due to insufficient fund. It will alert here in notification tab. Okay. Here, these are the indicators. It will checking the condition every 3 minutes. Which 3 minutes in the condition satisfied, directly place order in broker account. The next one is automatic. Automatic means order execution in live. Here in paper trade means they are testing the strategy. Then status started. Started means currently running. All 5 days running. Only thing is you need to log in daily before market starts. Then you want to edit any condition means you need to stop the strategy and go to edit option, then change whatever you want. Here I am giving 1525. My order type is MIS. So after 1520, my broker RMS will square off my order. Quantman doesn't know. Okay. Then reverse order will happen. So always if you are using MIS, change the time into 1514. If you are using normal order, you can use whatever timing, even 1529 also. Okay, now I am using 1525 and submit. Status started. Whenever condition satisfied, it execute the trade. MAS means margin intraday square off. It's used for intraday orders. NRML, normal, carry forward, CNC, those are carry forward orders. You can carry forward it position to tomorrow or weekly. Now I stop the strategy and the private public, I copy the link and share it with you for education purpose. Okay, this is not a good strategy or bad strategy, I don't know. Whatever the performance, right now we are backtested on the past performance. Past performance is not an indicator of future performance. Okay, you can use the strategy for backtest purpose. You can go to the My Strategy tab. Multiple folders are there. You can delete the entire folder. The strategy group of the folder in the strategies all are deleted. Right now, slippage is available in Quantman. They are working on it to add the brokerage part. For our market, put option is not working good because of our market is a emerging market. So whenever market comes down, our market will bounce back sooner. Copy and edit. There is a one option features trailing stop loss. Add 25%. I give 20%, right? So I give 15% and 15%. X is lesser than Y. Always X is lesser than or equal to Y. If you want to block the profit or book the profit, you need to give certain percentage from entry. Right now, my entry premium is 250. Okay, from 250 to 10%, which is 25. 10% I lock the profit. When market goes or reaches above 275, it lock the profit only once. 20%, I lock the profit 10%. there is a gap of 15%. Give the submit, it will work. Actually, Zerodha broker, there is a subdomain available in Zerodha for Zerodha users. You can use that subdomain. How charges you? How
Trading and investing involve substantial risk and are not suitable for every investor.